Donald Trump is the new president of the most powerful economy in the world. That's the fact, and we need to live with this until 2029. A lot will change. No one knows to which direction, but the slogan alone, "Make America Great Again," is telling you all. This time, Trump will be decisive. The grip will be strong. A lot is on the stake for him personally due to indictments and incriminations. We'll have a conversation with Charles Pinzon, Professor Emeritus at Central Washington University. Also, let's be honest, we are worried about the outcome of current coalition crisis in Germany. Chancellor Olaf Scholz sacked his Minister of Finance, Christian Lindner. Would that mean earlier Bundestag elections? I talked to the managing partner of Aalto Capital, Mr. Manfred Steinbeisser, whom I met in Riga last week when he was visiting the Baltic Capital Markets Conference. I promised to show some insights from that as well. Conversations with airBaltic's Martin Gauss and Eleving Group Modestas Sudnius also is in today's list. So have a great time together with Median Report. There were so many news last week that I wanted to pick something funny or maybe a little extraordinary for our news segment today. How about two unicorns merging in Latvia, Printful and Printify, two companies who decided to go together. One is printing stuff, another is providing a marketplace for those who want to sell printed stuff. It looks like a merger made in heaven from the business perspective at least. Will the potential be used in the right direction? That we'll see. No details about the deal has been disclosed yet. All we know is that both companies crossed their swords in the courtroom back in the days. Trial didn't start. It was a $100,000 agreement in favor to Printful. It would not be a surprise if the newly merged company will reach $2 billion valuation soon after the deal is signed, and may even launch an IPO on the New York Stock Exchange. That is not an unrealistic prediction at all. Potential Lithuanian government looks funny from the day one. First, Lithuania's Social Democrats want to form a coalition with a party, the Dawn of Nemunas, which is led by a man who is being accused of anti-Semitism. The president, Gitanas Nausėda, hasn't responded to this proposal yet. If you think that this is not enough, then listen to this. The potential Prime Minister of Lithuania, Mr. Gintautas Paluckas, has shares in a company Garnis, which makes battery systems and imports small quantities of Chinese lithium batteries for its products through Poland and Germany. He has claimed to restore relationships with China after the previous administration chose to do business with Taiwan. It even established diplomatic relationships. It invited Taiwanese Commercial Bank to operate in Lithuania and even ignited talks on a potential microchip factory as a part of investment package. Let's live another week and follow the story of forming Lithuanian government. And finally, some fun from Estonia too. Do you remember Anneka, the old school looking chocolate bar from Kalev? Well, now you need at least €7 if you want to buy a chocolate bar in a retail store. The reason for a very steep price increase is the last year's sudden growth of the price of cocoa. The price of the shops of a chocolate bar precisely represents the growth of the commodity. If a year ago the price for a ton of cocoa cost $4,000, now the price has reached $7,110. The same with Anneka. A year ago price was €4, now it is 7. The math is easy. But to be honest, the most important news last week came from the United States of America. Donald Trump will be the next president of the most advanced economy in the world. Let's look at the day one potential presidential resolutions which might be signed by the new president and that will start to impact economies around the world. So let's start with tariffs. Donald Trump has claimed that he will look into cancelling income tax and replacing it with tariffs ranging from few percent to 20% on all imports. A special exception will apply to China, whose imports will increase by as much as 60%, and imported vehicles from Mexico with 200% import tariff. As we know, Chinese has started up several companies in Mexico to avoid direct imports from mainland China. This will most likely be challenged in court, but with Senate and Congress under Republicans, the ruling could be in favor of Trump's new administration. Another post in danger is the Fed's main chair. Jerome Powell has its term until May 2026, and he said not to step down from his role if Donald Trump is asking him to. This can grow into a serious catfight if both men will collide at some point, but let's see and follow this too. Next one is taxes. It looks that Trump will keep his promise to lower corporate tax rate from 21 to 15%, and as said previously, eliminate federal income tax. Also, he'll most likely extend 2017 tax cuts to wealthy, or those who earn about $350,000 per year. And as some analysts predict, that will most likely skyrocket the US debt in the following years. I'm not talking here about deportations, deregulation acts. Let's leave it to some other future episodes. I'd better invite Professor Emeritus from the Central Washington University, Mr. Charles Pinzon, to explain how a regular American citizen feels these days.
It's, well, you notice they're clustered. You have this cluster in the Northeast, New York and New England, which are the little states up in the corner there, New Jersey, Delaware, and Maryland. This is kind of like the Northeast, is solid blue. And then you have the West Coast, Washington, Oregon, and California. And then you have this anomaly, Colorado in the middle, and that's because of Denver. And then you have another anomaly in the center of the country, Illinois, and that's because of Chicago. Where Harris failed was that she wasn't able to carry Michigan, Wisconsin, and Pennsylvania. If she had carried those states, you know, she would have definitely won, and substantially. But I was surprised that she did as poorly as she did in Michigan, and I was less surprised, but I would say I was surprised that she couldn't carry Pennsylvania. So it's because they have two big cities there. Another trend that I find interesting is states like West Virginia. These are small states. They really don't matter much in our electoral college. Used to be very solidly Democrat. But it's a very working class state, poor and working class, and it's become solidly Republican, solidly red. Ohio, which is a very urban state, it has quite a few large cities. It has Cincinnati, Columbus, and Cleveland. These are all cities of good size, plus smaller cities, Akron and Dayton. Very urban state, has become very solidly red, very solidly a Republican state. So the Democrats have lost the working class coalition that Franklin Roosevelt brought into play. And the reason for that is, I think white men in particular see themselves losing out to blacks and Hispanics and perhaps even Asians, losing, I think some of them see as their rightful place in a white Christian America. But the Democrats, when they nominated Hillary Clinton, I think that was a disaster, because that feminist point of view, that feminist message was the wrong message at the wrong time. She won the popular vote by 3 million votes, but she still lost in the Electoral College. It just doesn't play well in the working class states. This message of, these white men, a lot of them feel that, women have too much say anyways. So but the Democrats are going to have to get a whole new young generation. They have too many Nancy Pelosi's and Steny Hoyer's and Chuck Schumer's. Schumer's only in his 60s, which is a young man in the United States Senate, but they have to make way for a younger generation who's much more in touch with where the Democratic Party and where Americans are today. You know, it's not the Democratic Party of Lyndon Johnson or that era. So I don't see how, you haven't asked the question, but I may jump ahead, but I don't see how Harris could have run a better campaign. I thought she ran a very energetic, aggressive campaign. She only had 100 days to do it in. But with the message she had and being who she was, I don't think she could have done better. Now, could a white male, could Tim Walz, if we had reversed the spots, if Tim Walz had been the candidate and had been the vice president, I think that would have been, I don't know if it would have been a better, I think it would definitely have been a closer race. But would they have won? I don't know. The problem with polling data these days, it's so hard to get good polling data because they keep underestimating the size of the Trump vote. Pollsters have tried again and again because I think these are stratified random samples and all these regression models they use, but and people are so disinclined to respond to pollsters. In my time, when I was a young man, you had a landline and you got a telephone call and you always answered it. And if it was the Gallup poll or the Harris poll, you know, you gave them your opinion. Now, if the phone rings, you look and see if you know it. If you don't know it, you don't answer. So you have to make so many more calls. And so you look at the margin of error on modern polls compared to polls back in my day, they're much larger. You know, a Gallup poll in the 60s would have a margin of error of 1.5%. Today, it's hard to find a poll with a margin of error less than 3.5. And that's just simply because they have to oversample so much. Yeah. I'm sure you're more conversant with than I am.
No. It's very interesting. Let's talk about what's ahead. There have been different predictions, and that is one interesting one that is coming out of Financial Times is that the editorial where they say that actually Trump is a good president for the United States, not so much for Europe and other parts of the world, but for United States it might not be the worst days ahead. And basically economically they of course they analyze economic data and everything. So what's your take on this?
Well, I would have to challenge their fundamental assertion, because if you look at the history of the New York Stock Exchange, which has the Dow component on it, and which also includes NASDAQ these days. But if you look and see where the market has done historically the best, it's been under the Democrats, under Bill Clinton, under Obama, and you have now a Dow in the 41,000s. I thought a Dow 30,000 10 years ago was unattainable. Now we're at over 40,000. We have a labor shortage in the United States. And our inflation rate is down to 2.1%. We have a 4% unemployment. So I think from the Financial Times point of view, which would probably be very close to a Wall Street Journal point of view, it's the lack of regulation. One thing American corporations have complained about, and I suppose this is true for any corporation, and this goes back to even World War II. If you look at advertising 80 years ago, corporations were always complaining about regulation. There's too much regulation. So essentially what the Republican Party under Trump will be corporate libertarianism. So you'll have less taxation, certainly less corporate taxation. They'll give a couple of percent to the little people, but it'll be another big cut for the wealthy, for people with incomes over $400,000, over 350,000 euro a year, and major corporations, and they'll get a tax cut. Capital gains taxes would remain low. The maximum you pay, I think in the United States under capital gains is 20%. And so they may even lower the capital gains tax, could be to 15%. Trump is talking about abolishing the income tax and replacing it with tariffs. Tariffs haven't financed the American government since, I think, World War I.
That was Professor Charles Pinzon about the state of the United States economy at the moment. But let's have a flashback at the Baltic Capital Markets Conference, which took place in Riga last week. We'll have a review on the whole event, interrupted by small segments of interviews by three truly remarkable businessmen. Martin Gauss from airBaltic, Modestas Sudnius from Eleving Group, and one and only Mr. Manfred Steinbeisser, the managing partner of Aalto Capital. There were several interesting trends, which first was highlighted by Kaarel, the head of Nasdaq Baltic Exchanges, and then followed by the president of Nasdaq European Market Services, Mr. Ronald. Let's listen to both gentlemen first.
I put here a graph showing how our indexes have performed. It's a Baltic index. I have to admit that I'm cheating a little bit, because I chose 24 January and starting from basically the end of the financial crisis, so the course of 15 years. But if you look at it now, then we are behind SP 500 a little bit, and especially after yesterday's events. But still, I think looking at how our companies have performed, I think it's not too shabby, really. The downside is that the companies we have here are, at least compared to the US, they're pretty small. This is our top 10. We all know the reasons. There is no surprise here. We have had 30 plus years to build the financial ecosystems, the market economy, the financial literacy, and as I said, we are one of the most bank lending based in the region. One thing that I was especially proud of to have achieved last year was this. We are now in one index, MSCI Baltic Index. Why I was so glad that after basically 5 years of working on it, we finally achieved it. I think Latvia actually benefited the most, because before that Latvia was invisible on the index world map. What I'm not happy about is that, and you might ask, okay, you are proud of it, so what? What has changed? And you are right, so nothing much. We are still part of the frontier market index family with, for example, Sri Lanka and countries which are great, but I don't think we should be considered as a frontier market. It's a one thing or one place where you can really truly say that size matters. And we are, I think, penalized by because our companies are, the size they are. What is a good thing from it, or the silver lining, is that it brings us closer. The fact that we are now considered as one region. This is the first time, by the way, in Europe that such a classification was done. Now the upgrade or transition to emerging market is closer. I'm not saying it's close, but it's closer. It means that now we need to have 3 companies meeting this criteria here. I'm sure that we can manage. It will not be easy, but basically 2 billion market cap, 1 billion free float, higher liquidity, and then we would move into emerging markets.
I think that the very fact that in the Baltics you have been able to come together and create one index, that is incredibly powerful. I think the fact that on the CSD side and depository side, we have been able to create efficiencies by creating one CSD structure, one platform, is incredibly powerful, and no other countries have been able to do that. And that is an example that people ask about and is very, very sought after in terms of how things can be done. And very much, whether it's the Draghi report or the Capital Markets Union, Europe is waking up to the fact that we need to do more faster. And there is a sense of urgency to do that. And I think that is always what strikes me, whether when I come to the Baltics, whether it's Vilnius or Riga. And I haven't been to Tallinn yet, but it strikes me that the ability and the agility, so there is the desire, there is the willingness, and there is also the ability to move fast. And I think that whenever you talk about, yes, your economies are smaller, but at the same time, initiatives and across the CSDs, the indexes, the exchanges, state-owned enterprises, it is crucial to have that mindset. And that mindset doesn't just come from the exchange, it doesn't just come from the banks, but it comes from the governments as well, and the regulators, and the central banks as well. And that is incredibly powerful, and you do not see that in many states in Europe, right? And the ability for you to come together as a region and move quickly. So while previous speakers have talked about, okay, yes, there are certain good things and bad things about it, it's not necessarily about that. It's about how you move forward on the journey now.
When hearing these words, I kind of felt proud about what I heard. But then I switched back my critical thinking and realized that although our capital market leaders have done a lot to merge the region to attract more finances, governments, on the other hand, haven't followed in their footsteps. When listening to the Minister of Finance of Latvia, I reminded myself those many occasions when Latvians needed to drag themselves along other Baltic countries to fit in some sort of criteria or whatnot.
When I received the invitation, I could say, well, I would say on this meeting, because last year we come up with agreement on a government. We're heading towards 9% capitalization target, 9% from GDP capitalization target in Latvia, and things has been moving backwards. It's from 3% we're down to, I don't know, 1.5 or whatever. And of course, Mr. Rotskas made a joke about maybe we could adjust GDP in this case. Well, on that we're focusing too, but that's not our main goal. We want to grow on capital markets, and of course there are two important commitments. One is to preparation of Latvian government-owned companies for IPO, and then I might say there are a lot of things happening at the moment, and those are of course very loudly heard. It is airBaltic, which is where we government really how to say work with the company, and right now it is in pipeline, and there is just a question of right timing. Then we're working on merger of both telco companies, LMT and TET, and there soon again there will be government decisions. And finally, we expect at the end of the year, December, the Minister's Economy report about development of Latvia and Estonia green company. Those three are our main priority. Then we have agreement, general agreement with Riga government about two companies like Rigas nama pārvaldnieks, that's a real estate management company, and Rigas Ūdens, Riga water utility company. They will, as a first step, they will start with the bond, let's say, activities on the bond market. As a second step, they will head towards IPO.
The minister mentioned airBaltic as one of the companies heading towards the capital markets. That's why we will take a little break from the conference here and listen into my onstage interview with none other than CEO of airBaltic, Mr. Martin Gauss. First of all, congratulations on the new plane. I had this information that just days ago you received yet another plane. So how many are now in the fleet?
So it's number 49 now. With that, we are the largest operator of that Airbus A220-300 in the world. Very happy about it. Unfortunately, the 50th is coming only in February, so it would have been nice to close this year with 50 aircraft. But 49 is already a good number, and this one is already flying now with passengers.
Yes. All right. You were on the panel today also here. What were the key messages that you... if you can give a summary of the key messages that you delivered today.
The key message is that we are working towards the IPO of airBaltic, raising 300 million in equity. We will do this in 2025. We are seen as a very strong brand with a good growth story, doubling in size in the next 5 years from pre-investor talks. We are waiting for the right market conditions to announce that we will do an IPO. We have the team on board. We are very well prepared and finalizing it, waiting for the right time, which we see is happening in 2025. And I said that we need that IPO to execute our growth. And that's the key highlights. Unfortunately, I cannot talk about the details of the IPO. All the things I just said now were already in the public domain. That's why I can repeat them. Otherwise, you would not talk about an IPO before you announce that you do it. But as we have a special situation, as we are a privatization of a national airline, a lot of it is in the public domain, so I can confirm it. That's what I said.
Exactly. Now when we are looking in 2024, the mixed performance of different airlines in the world, how the stocks are doing, what does it signal to you? What kind of signal you receive from the market?
So what is very clearly visible is that US airlines have significant higher multiples than European airlines. And that is a reflection of the conditions we have in Europe. We do not have the same freedom US carriers have, and therefore we have much more difficulties to generate the same profit levels. Yeah, we have airlines like Ryanair really shining out there on profits, but overall it is more difficult in Europe. We had a lot of reports about Lufthansa Group, how much it cost for them to operate out of Germany, and I do hope that things are changing with the new EU Commission coming, that some of this overburden regulation, taxation, not changing to a single European sky is changing so that we have a much better competitive environment. Also, non-European airlines being advantages. If we look at the Chinese carriers being able to fly through Russian airspace, a big advantage on the flight time. Emission trading system in Europe not applying to carriers which have their hubs outside the EU. So all of these things are disadvantaging us in Europe as airlines, and therefore we see these mixed results. Still, we are an industry which transports more than 800 million passengers a year in Europe. We are needed for the economic growth, and I hope with the new EU Commission that we will have some adjustments or speed up on certain regulations. A good step, I think, the German government last night, the coalition broke, and broke means that there will have to be a different direction also coming from Germany, and I see that is needed so that we in Europe get to these changes, which in the Draghi report we saw a lot of it. We need to be more competitive also in the airline industry.
I was quite surprised when I interviewed a Finnish business person a few weeks ago, and he said to me, that was off the record, after the camera was off, he said, I fly more frequently with airBaltic now than with Finnair. And does that mean something that you are really dominant now and also growing more in the Nordic markets?
Yeah, we have basically silently, we became the largest carrier in Estonia, in Latvia anyway, and we are growing significant in Lithuania. So we are the largest airline in the Baltic states. We do 70,000 flights per year now. Part of that is flying for Lufthansa Group with our airplanes, but the majority of the flying is here. And we have grown in all markets. We have taken market share from competitors in all markets where we operate. On the Finnair issue, Finnair is a very good airline. They are just disadvantaged because they can't use the Russian airspace, and with that their key model of flying to Asia is at the moment not working the way. On the short haul, of course, I think we have an advantage with the most modern fleet. They do not have such a modern fleet yet. And then, of course, customers choose us because we also have the highest net promoter score in Europe of any airline which measures that. So customer satisfaction on airBaltic is very high, has to do with the product we offer. Nobody else flies such modern aircraft than we do. We will have Starlink coming soon on board, so high-speed internet access on short haul, which is something new in Europe. So I think we will see maybe that gentleman flying even more often on us.
Yes, and as a frequent also business traveler, I also should ask this question about ticket prices, because we are very used to, like, let's say, very modest and nice prices here, but I don't think that this is sustainable or in any way. Or how do you see this? The prices will go up, or what the market conditions will?
Yeah, we try to do two things. We try to fulfill all the obligations on becoming climate neutral by investing in latest technology. At the same time, we have more and more taxes and burdens on us, but then we try to reduce the ticket prices further and further. So obviously that doesn't work together, which means the market defines the ticket prices, not us. So if competition is still offering the tickets cheaper, we have to match that. But I think we will see the current ticket prices staying and slightly increasing over the years to come, but slightly increasing to be able to cover the cost, and this applies to all airlines. Because our cost today will be enabling us to fly climate neutral in the future, because we need to invest into new aircraft, which airBaltic does already, leading there with our fleet. All other airlines have to do the same, and as airlines have to buy new airplanes, they will need to pay for them, and that means you need to have the right ticket prices coming. airBaltic, I would say, ticket prices are still moderate, as you say. They're not at the lowest end, but we're still a low-cost carrier. But I see over the next years a slight increase in the average ticket prices.
Quality of emissions, investor education, capital markets union in Europe, boosting transactions. All these topics were on the table at the Baltic Capital Markets Conference. We continue now with quotes from Angelo Morganti, who is the partner at STJ Advisors.
I think the trends in Europe are pretty much similar. So in Europe, we have seen this year an improvement in market conditions, i.e. the volumes of IPOs have increased year to date compared to what the overall IPOs volumes in 2023. They're significantly higher than 2022, which was a very challenging year, but they are materially below 2021. So overall, we see an improvement in market conditions. We see that it is critical to have a successful IPOs to do a lot of work and pre-IPO meetings to mobilize and engage with institutional investors, because clearly institutional investors, and in particular international investors, are critical in driving the valuation and giving comfort to the local markets and local investors on the levels of valuation. And finally, we see that what we've seen, that a number of deals have been supported by international demand, but the importance of local demand. And for example, I will mention 2 transactions we worked on as advisors in the recent past, which were 2 IPOs happen in Romania. And for both IPOs, it was critical to have local pension funds, local institutional funds, and retail component. Of course, the international investors are needed, but it's a combination of all these parts. So what is critical, and I think it's similar for what has been said, is basically all the work in engaging in pre-IPO meetings and educating investors, explaining the equity story and giving comfort of the quality of the business, and then getting to an IPO. So I think overall, in these volatile market conditions, it requires a combination of all pockets of demand and a lot of work in educating investors, which is what I think has been done by Eleving.
But the general trends you see a bit more optimistic in Europe than maybe we see here. Is this a correct summary?
I think, in Europe, we're seeing that there are different markets with different, I think, pockets of demand. We're seeing, how can I say, fragmentation. So the days where there were international demand supporting all the deals, I think, are no longer there. So to this extent, I think in Europe, it depends on market by market. And I think you've seen that the London IPO market has been relatively quiet in the past 2 years. And this is because there is an outflow of UK equity from UK equity funds, which are the cornerstone of UK IPO. So I think the challenge for each market is to attract investors to the equity market. And I think from this, I don't think the Baltics are dissimilar. Of course, the size of the countries is smaller, but also to a certain extent, the size of the deals is slightly smaller.
And I think we absolutely agree. I think this is also our feeling, is that the trends are global rather than local, and it is not correct to say that Baltics is in disadvantaged position in a way, but we all globally experience similar trends, but obviously depending on size of the markets, they may be slight differences.
Absolutely, and if I can, we worked on a number of transactions in different countries, with some priced, some didn't. And we saw exactly the same challenges of attracting investors. And I think the key differentiating element is that if you have transactions above 1 billion or 1.5 billion of capital raising, then it is a different type of transaction, because these are seen as must-own stocks, and therefore investors need to look at these companies, and most likely they will participate in an IPO. When you're not in that category, and again, this year I think there were 4 transactions above this size, which accounted, by the way, for 70% of the volumes. But if you're not in that category, you are in a smaller, then I think the themes are common, and we've seen it at STJ on different transactions which were not 1 billion, but they were below. The challenges are similar across markets. Italy, Nordics, Baltics, Eastern Europe, it's pretty much the same challenges.
After a very appealing presentation given by a recent IPO graduate, Eleving Group's CEO Modestas Sudnius, I invited him to talk about the real lessons learned during the pre-IPO and IPO process from inside. So let's listen in.
It's always kind of interesting and to some extent easy to look back and to think, okay, what we could have done differently. And fair to say that we were still a bit more optimistic about market conditions because we chose the time window to do an IPO more or less 9 months before that, and then all those 9 months we were expecting, okay, that there's going to be some positive news, with some good development, but actually it was almost the opposite. So definitely this timing, it was at the end of the day still a big decision whether we stick to our initial goal and then choose that timing window or we change something. So so that was tough. From the other things, I think when it comes to the whole process, since I personally had an experience from raising debt, raising bonds, so roadshows and all this, having a syndicate, having a wide syndicate, it's very dynamic process, and I think we got what we expected, so that wasn't any big surprises.
Yes, and also there's always an after work that you need to do when the IPO is over, and these are investor relations. I know from experience from some other companies as well that they are maybe not in this process planning it really and paying much attention. How was it with you?
So, investor relations are very important because essentially you're selling something. So you need to approach it as a sales process, and no sales process happens just immediately. Like there has to be a relationship kept, and I think we've been quite good at that. We've been quite good at that with our debt investors, and we'll definitely try to keep the same mentality with our equity investors. So be a open company, be a transparent company, be a proactive company. Of course, it's time consuming for management, I have to admit that, and this is still something what you need to get used to, but our intention is definitely there, and I think it's definitely needed, because if your goal is that the stock grows, that if your company delivers results, they're shown in stock price, but you need to tell about that, you need to tell the story, so we'll continue doing that definitely.
Okay, it's good to hear. It's good to hear. And also, I know that Eleving Group is in a, let's say, capital-thirsty industry. So it kind of, you know that you need sooner or later you will need another capital raise or something like that. So how are you planning out these development steps and the growth?
Yeah, so I would say that almost every single day we're raising some debt, because that's our business, to borrow money and to lend it out afterwards. So this is a continuous process, and we declared that we want to double our business in next 3 years. And doubling, that means doubling the portfolio, and to build the portfolio you need a lot of debt. Now we have equity in place to be able to borrow that debt, but the actual borrowing debt is still to come, and we're definitely planning it in advance. So one thing where we see ourselves also being very active going forward is bond capital markets. So we've been successful. We plan to do and be an active player there going forward, but at the same time also building some alternative sources, so bank financing, local bonds in some of our markets, different impact funds with whom we're talking and where we raised. So many different avenues, because for our business, we don't want to be reliant on one source too much. Like, we want to have this kind of well spread when it comes to different sources and when it comes to different timings, like not to have 90% of your debt stack maturing at one time, and then you're kind of it's extra pressure for the business. So hopefully we're not going to end up in this situation.
I wish you all the luck, and I know that this will come. So thank you very much, Modestas, for your time and insights. Thank you.
The second part of the conference wasn't in any less interesting or dynamic. But Māris Vainovskis from Ašeradens Sutherland Bitons is on the stage with his debates and discussions. It's always interesting to listen in. This time we had an opportunity to hear the plans from two potential capital market companies, both from Latvia. One is state and Telia-owned telco company TET. Another is a real estate maintenance company owned by Riga City Council. These both companies have been previously mentioned by the Minister of Finance to be among the first batch of publicly owned businesses which will try their luck in the local capital markets. Let's first hear the chairman of the board of Rīgas namu pārvaldnieks, Mr. Māris Ozoliņš, and after him, Uldis Tatarčuks from TET.
So of course we are on the way to doing some rebranding, and that we will do as much as the same as many other things. Now, coming back to your question about do we fit? Again, we are the largest in the Baltics residential building management company, and we manage about 3,500 multi-apartment buildings in Riga, right now only in Riga. We have 2,000 employees, we have 150,000 customers, and we could do much, much, much more if we would not be bound by those, how to say, rules or regulations. So, therefore, we have a plan, and it's very secret, but because my lawyer is not so nasty as for some other companies, I can still tell, maybe they will become. Yeah, we have a plan. In 2026, we want to launch IPO. We want to launch IPO because it is needed, because we can do much more. And of course, Riga municipality is their decision, it's not our decision. We will only propose, and we hope that, that the elected members will vote for it. So we are now preparing for it, and we believe that this will give win-win-win for everyone, because first of all, some of our customers, not some, but many of our customers could become our clients, and as we are working with very stable, predictable revenue today, growing revenue, good profit, we are paying good dividends. We paid 80% this year to Riga municipality, so they can earn from dividends, and they can also influence how the company works. And also it will be great for company because of reputation and because of possibility to do more, to invest in many other areas. It will be good for Riga City Council, who will retain some ownership, and the value of company will grow. As a result, they will get some payment for dividends, and then also better or more valued company. And it will be good for society as such, I think, because we will contribute to this thing that everybody is talking about, but nothing is really happening, which is how to make so that the municipality or state-owned companies are going to stock exchange and help to grow the capital markets in Latvia. So I think it's win-win-win-win-win, 5 wins. Who can resist?
Exactly, and a little follow-up. So has this regulation at the moment impacted or stopped any innovation which you, let's say, have planned? Because innovation development is it goes hand in hand with capital markets, with business case. Has this stopped anything?
Yes, it has, because there are many things that we are not allowed to do, or let's say, I'm not whining, let's say the other way around. When we are here, when we are free to go, we could do much more, both horizontally and vertically. We could expand by regions, and even in other countries. We can also offer some new services. And for example, talking about innovations, we were working on a project about smart meters to be installed so that the people will save time, and then this will be more accurate. But some things are not allowing us to do so. So basically, yes, but I would also like to mention that there are more things coming now on the table, just being discussed, that I am afraid will even more how to say, prevent innovation.
So this IPO is one of the, let's say, having a private investor in your company basically unlocks your potential. This is what you are saying.
Yes.
Additionally.
Yes.
Thank you. Thank you. So you see, it's not a myth, it's a reality, this problem which we are having at the moment in Latvia. Uldis, your company, are you also, do you know what we are talking about here, this Article 88 of this law, or you do not read that one?
Oh, of course we are reading and we are following, and actually at the moment there is a discussion in Latvia's Employers Confederation we are participating in. It's not impacting us directly, because we are not like state-owned company. We are fully commercial company operating with innovation with whatnot. In a lot of cases sounds just like you, but the thing is that majority of shares of our company is owned by state, which is okay.
Yes. So you are state-controlled to some extent. Yeah.
We are, yes, in that aspect, yes, but our main target is to grow the value of the company, value of the capital we are running, and grow the business results. So that's a normal situation. However, at the same time, it's not so simple like on a picture. There is another aspect from government, and this unclear regulation from our perspective corrupts normal competition, because sometimes inside those regulations, state decides to delegate some kind of functions to the companies they own 100%, which creates a problem actually. They are getting worse service, overpaying for the service, and actually by this 88 punts, they are killing competition in some industries, which is not good from our perspective.
A lot of attention in the conference was steered towards attracting investors, not only from the region, but also outside, like Nordics, Germany, and further. This topic specifically was raised in one of the panel discussions, and here am I offering again a speaker from Latvia, Mr. Uldis Cērps from the Finance Latvia Association, who highlighted the need of a strong pan-European capital markets to finance crucial infrastructure projects in the future.
If you do the math, and let's just take a couple of numbers, and I'll use intentionally billions just to see how things add up. So you have the energy policy until 2050, which will probably require something between 30 and 50 billion euros. You have the decarbonization agenda, which would probably require in the ballpark of maybe 10 billion euros. You have the digital transformation of both public and private sector. If you add all these numbers up, you easily end up in $50+ billion envelope for the next 30 years. It's quite clear that this envelope cannot be met by the banking system alone. These investment needs are far in excess of that. So that, to cut the long story short, this calls for a paradigm change, and I hope that the political system is fully aware in the Baltics of the need for the paradigm change, from the capital markets sometimes being seen as a nice-to-have thing to becoming a must-have. Because without capital markets, it's simply not possible to meet the transformational initiatives of our societies over the next decade, 2 decades, and 3 decades, full stop. So we're not talking about diversifying, financing sources for individual companies, which is also important. We're not talking about the possibility of getting lower spreads. We are fundamentally talking about the need to have, an instrument, not a spare tire, an instrument to allow a transformation of our societies, unless we want to lag behind everyone big time. I think that is as simple as this.
I want to introduce my last conversation with Manfred Steinbeisser, with his own remarks at the panel of Baltic Capital Markets Conference about looking for capital over borders. Let's first hear him out and then switch to the interview.
I would say the main obstacles are definitely expectation. I would really want to start with expectation. I'm talking more now about the SME sector rather than about the blue chips or basically large caps. Because it's a long journey, and issuers, management, they need to understand that basically tapping into foreign capital markets requires some time. Time is required in order to introduce yourself to the company, to the market. That's needed because in most of the cases, you are not really known. When you, as a Baltic-based issuer, tap into the German market, and we have done it a couple of times. First of all, you need to explain many things. And the main question in the beginning is, why are you coming to us? And then you need to explain, because we need more than we get in the local market. We want to go to the international market because we have still a lack of institutional investors and so on and so forth. I think this is the main obstacle to start with such a project with the necessary patience. The rest, I would say, is pretty much the same, when in comparison to doing financing here locally. It's not a one-off exercise in our point of view. You need to build a relationship, you need to maintain a relationship. Because capital markets is built on trust and on track record. We acting as a financial advisor, as a capital markets advisor, we basically face the issues, how difficult it is when you want to do a cross-border capital markets transaction because of underlying infrastructure. You have here in the Baltics, as the infrastructure provider Nasdaq CSD. Nasdaq CSD is now more or less well connected to Clearstream, Clearstream Frankfurt. but there's no connection to Euroclear, and so it makes it very difficult for investors in Germany, for instance, for investors in Italy to participate in some local investment opportunities, and probably the other way around the same.
Yes. Let's say your experience, your vast experience that you have, a very prestigious company, and now Baltic markets, Latvian market, for example, which we heard in the very intro, was really on the map before MSCI index. So why the interest in Baltics?
I mean, I have a personal interest here, because I was living in Vilnius in Lithuania from 2005-06 to 2014. And maybe this is the reason why I see a few things more positive than basically others. Because I came here in 2006, 2007, I have met Nasdaq in Vilnius the first time in 2012. There was basically nothing here.
Yes.
And when you look now into the capital markets, what is happening here, I would say that even some of the colleagues in Germany, they get a little bit jealous what was happening, especially the last years with retail investors here. I think that the Baltic market, or the pan-Baltic market, was much more active than the German market.
So
and so I see many positive things, but I think we also need to be reasonable. Things take time.
That's why I wanted to ask, was it the interest that it's fast growing? Although it's not really fast growing, it's how you to what you compare, of course. It's all relative, but
of course. But I would say, of course, it could always develop faster, because I think we as human beings, patience is probably not our strongest element. But I think we should not always analyze negative things. We should analyze negative things in order to understand what can be better. But I think we should also look a little bit what we have achieved so far, or what the region has achieved so far. And I would need to check, but as I was mentioning, I met the stock exchange in Vilnius in 2013. We advised the first client in regard to capital markets matter in 2015-16, and we had to go abroad because there was nothing here. Now it is that basically that we combine the local market with the international market, and it works out perfectly well. Not yet in the full scope, because of what you have said. We have a lot of island solutions. We don't have basically a unified capital market. But I think certain things have already been achieved, and hopefully they will be developed further.
Yes. When you see in the boardroom a company, a decent company, a SME from Germany, and for example a company from Baltics like Eleving Group, for example. If you compare, do you see like any differences in something? What maybe is different?
I would say, based on my experience, management teams are here in the Baltics younger, more open-minded.
Really?
Yes, I would say more open-minded. In Germany, our backbone in Germany is the SME sector, family-owned companies, management-owned companies. We can be very proud of those, but to some extent they are not open-minded enough, and therefore it is very difficult to convince them, telling them, let's also use the capital markets. My experience here, especially because you mentioned Eleving, with the CFO and the CEO. The CFO was, since our first meeting in 2016, very open-minded. He said, let us use the capital markets. Let's be prepared for the capital markets. Let's build relationships. This is not my cup of tea, therefore I'm partnering up with advisors. Here the local people, they consider partnering up with advisors not as a weakness. In Germany or in mature Europe, people sometimes believe when I'm partnering up with advisors, I'm considered as weak because I can't do it on my own. And in that respect, I would say that the Baltic states, they are more advanced than mature Europe. That's also the reason why we feel so comfortable here, because we have, besides all the challenges, we have to solve, but we have very nice relationships to the open-minded people there.
This is it for this week. We are going to do something very special for the next show. The authors of segments and news bulletins will be 17-year-olds from Latvia. I have been involved with a program of Riga Business School to give a bunch of young people opportunity to produce some content on the show, and under my guidance, next week you will hear interviews with politicians and economists by the Gen Z. I'm sure that this will be an interesting experiment for them, for me, and you as an audience. So stay tuned, subscribe to Median Report channel on YouTube, find us also on Spotify, and I see you next week. Have a great health and even better deals. See you.